Hey folks, Louis Cornide here with IFC Funds and Decor Realty. If you're an accredited investor and are looking for big returns with minimal hassle, discover how IFC Funds makes investing easy, transparent, and safe. Schedule a call to go over our latest fund launch, Capital Appreciation Development Fund. Hi guys, today we have a great guest. I've known him for a number of years, Tony Cristobal from RESF. Tony is a good friend of mine and also a co-broker that we have done a significant amount of deals with. I invited him today as part of our monthly webinar series with IFC Funds. One of the nice things that we're doing with IFC Funds is that every month we're having a guest and we're talking about different things that we have done together, not only with Decor Realty, but with IFC Funds. We've worked together on many real estate transactions, many commercial real estate transactions, multifamily, retail space, restaurant spaces. And I wanted everybody to meet Tony Cristobal with RESF Brokerage. Tony, I know that you have done a ton of business brokering in the past, and I do get a lot of questions. And one of the things that I do is I refer it mostly out to you. I have some questions that we usually get. What are the types of businesses that you're currently in demand in South Florida today?
Yeah, so it's funny, I actually just did a search because I'm transitioning into helping some of my clients and even doing some of these businesses or getting into some of these businesses with some of my good clients and clients that know what they're doing and have two fingers over their forehead. And I started searching all the businesses in South Florida too. And I've done this multiple times just to see my competitors or what they're doing or just to check the market. From 595, the expressway, which is Fort Lauderdale, all the way down to the Florida Keys. We have an office down there as well. And primarily everything out of the 649 businesses for sale, the majority of them were all restaurants and beauty salons. And funny enough, beauty salons trade more than restaurants. And there's over, a couple years ago, there was over 174,000 restaurants.
For sale?
Yeah. No, 174,000 is available. For a sale out of those 649 businesses, about 400 was beauty salons and restaurants. A good part to that, and we might dive into this after, is the licensing and permits. So it's not just like any retail businesses, turning some of those retail businesses down, like cell phone businesses. Even though they do have some tangible assets, they don't have an infrastructure. Anyone could just replicate them next door. So mainly beauty salons, restaurants, we sell a ton of them. Recently, I've been working with a lot of construction companies. Those are great, and a lot of people love those. Something with an infrastructure, so even if you have a failing business, someone will go in there and take it over, or your beauty salon wasn't successful or something happened, they could come in there and put something else. And
Tony, with the licenses, I know you and I have done a couple of businesses where not only we help them with the buy and sell of the business, but we also help them with the licensing, which is so important. Your office handles a lot of that.
I actually was just on the phone with a girl that I contracted to be an extension of my business, and all she does is licenses, and she's full-time just doing licenses. So think of the amount of business that I give her, because there's a state level, there's a local level, county level. Right here in Miami-Dade, we have a huge problem with a department called DERM that they check with environmental stuff, and you just got to know what you're doing so you don't fall into any surprises. And a lot of the people, they go based off, and I find that to be the biggest problem. Everybody goes, and Spanish people, which is predominantly South Florida, they go based on what they hear. So I even dove into it before I had my licensing extension. Yeah, I would go into it because I saw that a lot of Spanish people or hardworking people, they didn't have the time to go to the county. They didn't speak the language, or they were working, making whatever. They don't have time to go to the cities. And me being a first generation Cuban American guy here, I said, you know what? I'll take it on. I like a challenge. I met a lot of very good people, a lot of people that showed me a lot of things. Director of departments in the cities, counties, municipalities, they're not going at this at an adverse approach where they want to be your enemy. It's just, you need to understand it. And what I was getting at is you go based on what he said, she said, I said, which that's big in the Spanish community. That's a recipe for disaster. So I would go in there to the cities, I would find out a lot of things, but then I found myself more in the city than actually doing my job, and I would do these things for people just to help them. And I said, no, I got to change this up a little bit.
I remember in one transaction that you and I had that there was an issue with a fire in a building, all these things. And today with all these code changes, especially after the Surfside, you're seeing that now right before closing, having to go in there and
check everything out, and it's going to get worse now,
right?
Because there's something that I was looking into, because I myself, full disclosure, invest in properties and business myself. You know that, Louis.
Yes.
And so I'm on both sides, and I've always understood both sides. I'm trying to look where there's a problem, there's an opportunity. And now there's going to be a huge disaster with the whole condos and everything. It's the 50-year, 40-year recertification, but that's going to be every 10 years. It's going to hit really hard where the average people live that they can't go up on the reserves. Like Miami Beach, people have money over there.
I will tell you that we had last year, one of our investors in 2 multifamily buildings, I think I shared it with you, we had to obtain the 40-year certification.
Yeah.
And in one, we had to put all new electrical.
Yeah.
So we managed that whole thing, and we had to do it while there was Section 8 tenants inside the property, which was very difficult because you have older folks, you have some people that are disabled. So we changed over all the electrical. The amount of expenses were about $175,000 in that building.
And they hit you with the same thing as fire and all these environmental things where they go at it, environmental protection, and I understand that, and life safety. And once they hit you with the life safety, that's it. There's no argument. You got to do it.
Correct. Especially when you're dealing with some of these tenants that sometimes are a little bit difficult to deal with. But I think it's a thing that investors a lot of time need to know.
Yeah.
Because if you're looking at, when we underwrite deals, multifamily deals, we take a look at them and we will actually account for that. Say, look, we need to spend X amount of dollars per unit. And that has to go into the factory when you do a pro forma on the return, right? Because to say that a building is doing 10% or 11% return on the investor's money.
Yeah, but you're going to lose 5 months, etc.
Correct. So we need to make sure that we value that.
And my biggest thing to that, and I told all the cities and municipalities, is the biggest problem for like landlords and tenants. When I represent a landlord, I represent a tenant. The problem with the grease trap that I think we're going to talk about now, when we have an undefined time of when this is going to end, that's where the problem happens. Because when I get the deal or when I'm working the deal, I could negotiators, we make deals happen. There's 50 grand on the table. We could squeeze here, we could squeeze there. But the whole undefined time, that's where that doesn't fit.
Which many times could be months for it to get
months,
that.
years, or it could be that you're not going to get it. I'll give you an example, and this is a really good one to where you're getting at. I'm in the process of about to close on a daycare, the business with the real estate, right? It's in Hialeah, and there's a program, because a lot of these people are subsidized by a thing called Step Up. And Step Up gives each kid $8,000 a year. You work out the math, that's a good grant that they get, and part of why the buyer's buying it. I brought in a consultant, this is all she does, one of the top DCF consultants, to help them out, because the seller is telling her, and full disclosure, I represent the seller as well, she's telling her, hey, and he's not doing it out of bad. He's like, don't worry about going to the city. We got it figured out this way or whatever. I bring in the consultant to help this lady. It's not even my client. I just represent the seller, and I'm not trying to kill the deal, but you heard me say it earlier to someone.
I did.
It's not location, it's disclosure. I tell that all to my people.
Yes.
Because eventually you'll find someone that could work through it. It's good to know what you're buying.
Yes.
This lady's buying this, and the consultant told her now in December, which nobody knows, not even the seller knows, they have a daycare license, but they don't have a preschool or educational license. And the grant that they're getting now in December is going to cut off. The guy's not selling because of that, but they're going to walk into a pickle. And she works with another consultant guy that all he does is Hialeah. And all these cities and municipalities, they don't like churches. They don't like all these things. The traffic is one thing, not paying taxes and everything. They're not too fond of them. They're not ever going to give them that educational permit. And I prefer that to be the buyer. Now the buyer's warned, they're not going to get that and work the numbers around that. It's going to be a huge catastrophe. It's going to happen to all these daycares because they're going to start
pulling back.
Yeah, and this has been happening. I did one daycare not too
I
long
remember.
ago.
I remember. Yes, I remember.
And I remember one thing was they manually go in, because a lot of people are grandfathered in, and they measure the kids again. They measure the square footage for the capacity. They get square footage bathrooms and the outside area. But the thing is, if you were counting on 50 kids or 100 kids and now you only get 40, it's a huge difference, especially if you're government subsidized.
And many times, some of these are foreign investors,
Of
right?
course.
People that haven't had past experience with doing business
Or
here.
people that don't care, not to scare people, but the same thing, I'm sure you run into it in some cities here where they'll have 3 electrical meters. That's one of my favorite things. And other agents, and not to trash that our industry, because I'm also a realtor, they say this is a triplex. And even the appraisers go by that. And there's a way to do that. It's actually a legal duplex.
Right.
And they will never change it to a triplex. And you're selling one thing, but it's another thing. And then the investor wants to go after us. Or
one of the things that happens on my time, since I was in banking for so many years, is that you take those buildings, a lot of times we'll take a look at them and then we can't get financing, right? Because they're selling it maybe 15 units, but when you get there, but it's only 10 units. And then what ends up happening is that you end up really either in a contract that you can't close because you either have to do it with either hard money or all cash, or it ends up being a difficult situation, especially if you have foreign investors. And many times the fact that we as real estate brokers, we have a duty, right? We have a duty to make sure that we know what we're selling. Also, if we're listing it, to do a little bit of investigative work.
Working with the buyers. And sometimes it's things that they really don't know. And again, it's the Spanish thing, and that's my people, so I can't talk about anyone else. They go based on what they heard. I bought this property like that, and it's not a problem to them. It's going to become a problem, and it won't become a problem the first year, second year, or even when Louis or me are involved. It becomes a problem when you go take out a permit because you want to extend the backyard, or you want to build a pool for your tenants. Who did this? Oh, this is a 3-1. It's not a 5-3 or whatever.
Well, we had a property that you and I, we worked on together throughout the years, which is a restaurant here in South Florida, and they just decided to start putting tables outside. And then the city came in and said, hey, look, you need a permit for that. And then they were like, well, we didn't know we need a permit for that. You do need to know, because at the end of the day, the cities are going to try to get their tax revenues.
And I've noticed that every single inspector is a lot. The people that are already established, I don't know if it's that they have a relationship with them or they're already there. They see they're just getting by. A little softer on them versus on the new buyer. They go in there and they want to set like a precedent of, hey, this is going to be like this. And you're going to do things the right way. It's our job to know. You know?
So in addition to also helping with licensing, you guys also help with the due diligence to disclose to them, hey, look, these are some possible pitfalls that might happen in the future. Sometimes I know it's frustrating. You and I have talked about it because they don't even want to hear it. They get so excited that they want to buy something, that they actually found something that they're interested in buying. But really, especially with you and I that have done a ton of multifamily transactions together, as well as some commercial leases, it's important to take the time and have those conversations with the clients, because many times the clients don't realize that could be the difference 6 months after you've already purchased or signed the lease about something that you really want to do or can't do. We saw it also here in Coral Gables, where we had some commercial space. They wanted to put a smoke shop and it was too close to one of the schools.
Yeah, the other example that the guy wanted to do, it's called a pediatric extended care or something like that.
Yes.
And it took him like a year to 2 years to open, just because Coral Gables has never had one. So he had to, and we took him, one of the best architects, but it just took him too long to open because just the city didn't have it. Thank God the guy opened, he's doing good. But I think he knew, because medical people tend to analyze things a different way or have more of a budget. But you do that to a restaurant owner, and then they don't know that they need to build a new grease trap, or the city catches them with something. Or
makes them update something that they thought they weren't going to have to update.
They invested the 100, 300 grand, they don't have the money.
What about the typical time? I know when you and I have done commercial transactions, we can probably close something in 45 days, 60 days. A business sometimes takes a little bit longer.
If they're getting the SBA financing, it could go up to 90 days and more, depending how you give them the paperwork. And everything is backed by the SBA because the banks feel more comfortable. Nobody in their right brain wants to ever land on a business unless they're extremely successful or something has some type of tangible asset, something you can grab by. You know what I'm talking about.
Yes.
But you could do it a lot quicker. It all depends on what you're buying. If you're just buying, for example, the rights to the space, or you're buying, which they call that down here, like the key money. If you're buying, certain things can play out a lot faster. Financing is one of them, and the approval from the landlords. I have some of these biggest companies, and I don't know, a ton of real estate that are taking from 3 to 6 months to get approved. I just had 2 transactions. One of the last one cost me a good amount of money because I put my money where my mouth is. And I told the guy, if you don't get approved, I'll reimburse you. I ended up eating the cyber fee.
Wow.
But it's things that happen, and it's risk and reward. Yeah. So it could take as quick as 15 days to a little bit longer. But again, it depends a lot on the landlords, the financing. Down here in South Florida, for mom and pop business, the majority of the people, and I like to work with people that already have the funds, they could close on them. A lot of people, it's coming back around.
At IFC funds as well, not only are we doing it for our own properties, but we're also getting involved with other investors and other owners that want to close. The banks really have been so difficult in trying to...
The insurance problems that we always talk about.
Yes, the insurance is something that I'm dying to have. One of our insurance reps, which we have done a lot of business, but we saw in some of the properties in our portfolio that we manage, increases of 50, 70% on insurance premium, which On an income producing property, this is the part that is different from when you do residential. There's always the emotional factor where one of the parties falls in love with the house, so they'll justify whatever it is they're paying. But in a 10 unit or 15 unit or 25 unit or 100 unit building, when all of a sudden you have a pro forma and you have a budget and you look at the budget and all of a sudden the insurance premiums are going up. We just closed on 2 buildings in Alapata and we did it with seller financing. How were we able to do that? We do have property insurance and we do have liability insurance on the building, but we didn't have to get wind. The wind quote on that building was 4 times the price of property and casualty and liability. So we were able to buy a building, take it over. We now are doing all the things that we usually do, which is taking a look at if with our economies of scale and then the technology that we put, making sure that the tenants are paying the market rates. Many of these older owners haven't raised rents in years. We end up going into it, doing an analysis, or many times we do offer it to some of our partners in the Section 8 housing. Why? Because typical Section 8 right now, apartment for a 1-bedroom in either Alapata or Little Havana or some of these, or even in Miami Beach, is for a studio or a 1-bedroom, you're looking at anywhere between $1,600 to $1,900 a month compared to some of these other owner market that maybe they're at $1,000. You're talking about a significant increase on those things. So really the fact that the banks really are not cooperating these days with borrowers, especially some of these small business guys that are out there hustling, they're putting their own money.
I feel like they don't understand the South Florida market because the same thing happens in business and it happens all the times with all kinds of businesses. You can have the best, and I talk about it with my big landlords, have the best franchise, the best thing, but the South Florida market is so hard.
It is true.
You know?
It is a little different here.
The same thing with insurance and taxes as well. And I'm sure you're contesting the taxes. We just did a big medical HMO deal in one of our medical buildings. I'm self-insured, but they didn't want to allow us, as a big company, to self-insure for wind. So they ended up auditing my landlord's financials, and they figured that the guy was strong enough to self-insure the building, but everything you could imagine in the book and the lease. But we did it, and my landlord saved a ton of money. He told me, I have a construction crew. I could have that place. He's like, why would I want my building? Oh, and it was a Category 5 building. Top it off. So it's like, why would I want there to be a leak? I'll fix it in 3 days because they made us sign off on that.
We see that a lot in some of our older buildings that we have, but the truth is we do a lot of preventive maintenance, but we continue to think that there is tremendous opportunities to do transactions with some of these older owners that want to sell. And now with the whole IFC funds and the fact that we are allowing our outside investors to invest, some of the properties that we manage, we weren't investors on. Now, because we opened the fund, IFC Funds is allowed to invest in multifamily together with some of our investors. Is we are also able to invest in new construction projects that we've already funded. But I wanted to thank you, Tony, for coming by. I know that we're very excited about our union with you. We want to continue working, and I know that we have many more years to go. And the whole thing is the fact that we communicate so well together and we take a look at some of these changes. This is Luis Cornide with Decor Realty and IFC Funds. I wanted to thank Tony for coming today and sitting down with us and talking a little bit about all the nuances with business brokerage. Thank you. If you're interested in finding out a little bit more about our Capital Appreciation Development Fund, join us in our monthly webinar at ifcfunds.com. We just launched this fund and for the first time are allowing outside investors to participate side by side with us in many of our top tier private equity opportunities.